Good afternoon, fellow Rotarians, guests, and friends, and a special welcome to those of you who are joining us via Zoom. Thank you so very much to each of you, for attending our October 6th meeting of the Rotary Club, or is it October 7th? It's October 7th, that's what I thought after I said October 6th. October 7th, Rotary Club meeting, Cincinnati, in the beautiful Hilton Netherlands Hotel downtown. We will have the national anthem via video, following which Kay Adkins will give our invocation and begin the recitation of the four-way test.
Thank you, President Melinda. Dear God of the universe, thank you for bringing us the magic of seasons. October brings us autumn days with its magical, rich tapestry of colors. We are grateful for those beautiful leaves that then fall and provide nourishment to the seeds of new growth. Beauty is all around us. We appreciate the loved ones in our lives for all the ways that each of us is cared for and supported. We can serve and give to others, service above self. We appreciate all the financial and economic expertise a number of members bring to our club. Several help manage our foundation funds, for which we are grateful. We thank all our club members who lead the way to opportunities for service in the region and in the world. Thank you for the meal today and for those who prepared and served it. Amen. Now let us repeat the four-way test of the things we think, say, and do. Is it the truth? Is it fair to all concerned? Will it build goodwill and better friendships? Will it be beneficial to all concerned? Thank you.
Thank you, Kay. Next, we will have our prospective members, visitors, and guests to be introduced by Bill Stilley, followed by a presentation from our meeting sponsor today, AAA Bob Summerall, and that will be from our Rotary corporate member and TV personality, former TV personality, Cheryl Parker.
Good morning, and I too give you a joyous welcome from Cincinnati Rotary Club 17, the 17th oldest Rotary Club in the universe, and I might add the best. We'd like to welcome some guests and potential members, and if you would, as I announce your names, stand up so that we might recognize you. Ariel Miller has brought Adil Fardeheb. And he's going to be in classification today, so welcome. Thank you. Jim Hudson has brought Lucy Markovich with Kroger. Welcome, Lucy. And Linda Muth has brought two guests from U.S. Bank, Nick Gray and Tim Roth. Nancy Reitz has brought a guest, Thomas Courtney. Welcome to Rotary Club.
Good afternoon, Club 17 and special guests. It's good to be here. I'm going to do an interactive commercial, so show of hands, how many of you know that October is Car Care Month? Raise your hand. Did you know? Okay, now you know. Another question, raise your hand. How many of you knew that Bob Summerall Tire and Service is part of AAA? Okay, more hands. So it is Car Care Month, and AAA Bob Summerall Tire and Service is offering free vehicle health inspections at all of our locations. We want to make sure that your vehicle is ready, especially for winter that's fast approaching. And we're also doing free flat tire repair. You don't have to be a AAA member to come to any of the locations. There are flyers outside on the table So take one and also get one of our Don't Text and Drive air fresheners. Make sure your vehicle's in good condition and that you and everybody around you are safe as well. Enjoy your lunch.
Thank you very much, Bill and Cheryl, and welcome again to our members and guests who are visiting with us. Now we will have our announcements. There are a number of announcements today, so if you could just bear with us with these announcements, but some of them may apply to you, so please listen carefully. We have several birthdays this week. October 5th was Ed Devoid. If you are here, please stand. October 6th, Charles Fellows and Brian Miller. October 7th, Jeff Long. October 8th, 3 birthdays, Jim Ernst, Mike Leahy, and Nancy Reese. October 9th, Brad Drayton. And October 11th, Jeff Betts. Let's give them a round of applause for their birthdays this week. Woo-hoo. And with that, we will go right along into the Split the Pot. As I've shared before, 25% of the pot goes to the winner, 25% goes into the accumulating pot, and 50% goes to the membership development efforts of our club. Anyone is eligible for the first drawing with your tickets, and then Club 17 members are eligible for the accumulating pot. Today's winner will receive $53. The club then will have $106, and the accumulating pot is $733. So we'll ask past President Al Koncius to pull the ticket, so if you could get your blue tickets out, and he will give us the last 4 digits to see who wins the winner for the initial drawing, and then Club 17 member who will be able to draw for the rolling pot of $733. The winner is, the last 4 digits, 1168. Is that Jane Burkhart? She will be pulling for the Queen of Hearts. Jane? 10 of diamonds, oh well. Well, good try, Jane. So get ready for the pot for next week. District 6670 has a request for the Tour de Gym. It's urgent need for volunteers. The 2021 Tour de Gym, a bike ride benefiting local nonprofits, is still in need of volunteers to make this event a success. The date of the event is October 10th. Additional information regarding this is in the E-Raise. So please go to the E-Raise if you're interested in signing up and fill out the information there so that you could volunteer for that great project. You can make a difference to a new Rotarian. We have 9 new Rotarians since July. We have a deal going to classification today. That will be 10 members. With that, the new members have a red sticker on their badges. We want those members to become actively engaged in our club. A deal is a perfect example of people getting engaged, our members, Rotarians, before they join. Once they join, we want them to feel welcome and engaged as well. So we have what is called the New Member Advisory Committee, and the chairperson of that committee is Michael Schmidt. Michael, would you stand? Thank you, Michael. Each new member is connected to a current member of the club, and serves as a mentor, assisting the new Rotarian to complete the activities, including a new member project, to be able to attend the ticket peeling off of the red ticket experience for the club. But in order to be able to take away the red new ticket sticker from their badge, they have to complete a certain number of club activities, again, as I mentioned, including the new member project. So there will be a meeting today, immediately after this meeting, right here in the Hall of Mirrors with Mike Schmidt. If you are not a member advisor, please consider that today and then stay for a few minutes to meet with Mike Schmidt. If today isn't convenient for you, just call him or email him and set up a time that you can meet over Zoom or in person. Celebrate World Polio Day with Pink Doughnut Project, and it's the Purple Pink Doughnut Project. We will be partnering with the Wyoming Pastry Shop. It's a great project. It's a fundraiser for End Polio Now. And as you know, Rotary has been very active since the 80s with efforts to fulfill the great desire to end polio and eradicate the disease. So with that, there will be 12 stick donuts with purple pinky, with a purple piece on the end. As you know, when the children are inoculated for the eradication of polio, they get their left pinky painted pink. So they will have the Purple Pinky Doughnut Project. With that, 100% of the proceeds from that project, when you purchase a dozen of donuts, 100% goes to Club 17's account to End Polio Now. The Rotary Club of Cincinnati will cover the cost of all of the donuts, and that's why 100% of the $20, which is the cost of a dozen, will go to Rotary International for those efforts. That's October 22nd. It's on a Friday. It's about 2 weeks from now, October 22nd. And their sign-ups are in the lobby if you didn't see them on the table there. You can check it with the office. Also, you can send an email to the office and contact them, or just pick up one of the flyers. Thank you very much, Jane, for that question. Next is a very exciting announcement, and I know most of you know this by now, but Club 17, again, has been the sponsor of the latest in Cincinnati area National Jefferson Award winner. Bill Stilley has the shirt right there. Katie ZQ, CEO and co-founder of Found Village, was honored during the 49th Annual Jefferson Awards. Most of you, or some of you, may have remembered when she came and spoke to our club, and there were 3 people who were recommended and nominated, and she actually came away to be the representative for our club. She makes the 9th National Jefferson Award winner for Club 17. Woohoo! There was a live broadcast by Multiplying Good, which is formerly the Jefferson Award Foundation, and that link is there. You can still go back and see that if you were not able to see it live when it happened. And also, Katie will be joining us hopefully soon, maybe even next week, so we will be able to congratulate her personally and recognize Bill Shula and the committee, and Bill has worked on that committee for a number of years. Let's give Bill a round of applause. Thank you very much, Bill, and congratulations again to Katie. Members in the news, Rotarian Eric Pettway. Eric is here. Please stand, Eric. Of Journey Advisory Group. Eric, it's a registered investment advisory firm, RIA. And Eric has been appointed as the Chief Investment Officer and to the position of President of the CFA Society in Cincinnati. Let's give Eric a round of applause. He will have professional oversight of over the CFA Society of over 500 members in the areas of ethical and professional development, and also an open forum for the local investment community, and to keep awareness and create awareness for the CFA designation. So congratulations. Next week's meeting will be United States Navy retired Commando Kirk Leopold. We will have the large club conference here next week, and we are really excited about it. Linda Muth, our executive director, has been planning for this for over 2 years. Let's give Linda a round of applause. Thank you, Linda, very much for your efforts. We will have about 90 to 100 reservations, room reservations for the Hilton here, and we will have members, executive directors, and presidents-elect from the large clubs in the United States and part of Canada here with us next week from the 13th through the 16th. Some of you may have seen the announcements in the E-Rays and also in my newsletter about volunteers needed for certain areas. If you could please check your schedule and see if you can volunteer to help us out. We will have a number of people visiting with us, and they're excited. As a matter of fact, I got a call from the president from the Madison, Wisconsin club just yesterday. And so they're looking forward to coming, and we're looking forward to hosting them. And one last minute note, Vince Hartman, some of you may know Vince. He is a 2-time member of our club. We are glad to welcome Vince back from Florida and glad that he's back with us again. He is the chairperson over the airport greeters, and he is needing some more greeters for the role of the airport greeters for the area that he's in. If you contact Vince, he will give you the details. There are some times on there as well, and he's going to send out, and I may have already sent it out through Club Runner. He has some opening dates and slots, and will give you some detailed information. So please check your E-Rays and also the newsletter. And Vince Hartman, you can check in your directory and maybe contact him and ask. He will give you those specifics of the opening slots. They have some volunteers, but he needs more. A few others need some volunteers as well. Yes, thank you. Past President Al said that Vince sent an email today. Thought I saw something coming across, but I was on my way downtown. So if you have any questions about any of the volunteer positions needed and you can't find the information that you're looking for, feel free to contact the office, and Linda and Christy will be glad to help you. So looking forward to the ArcEd Large Club Conference next week, so hopefully you can be here and maybe even bring a guest. Because we will have such a large group next week, your RSVPs have been required of the hospitality area of the hotel, that you would please make your reservations by the morning at 11 o'clock. The hotel has to prepare the food, the agenda items for the staff members, and contact staff members to know how many they need to come into work and to prepare the meal. So if you could please have your RSVPs in by 11 o'clock. Next, we will begin our program for today. As you see, we have some Rotarians who are on their way up to the stage. This is actually Plan D. So we are really excited that as a Rotarian and as we are in the workforce and our homes, we have to be flexible, be able to pivot, and do whatever we need to do to provide good service in the world, no matter what the cause or the occasion or circumstance and situation might be. So we are really excited that past President Al Koncius will be leading and facilitating a group, as Kay so graciously prayed for, related to economics and the financial investment world. So there will be 3 of our members. We have President-elect Steve King. We have Eric Pettway, whom I just spoke about. And we also have Susan Snodgrass, who is a member of one of our finance committees. She serves and does an excellent job there. So welcome, and take it away, Al and panelists.
Melinda, who is the Plan F? Was that me? Okay.
As Chevy Chase would say, I'm Chris Welsh and you're not. And actually, I'm not either. I'll give you a brief explanation as to we've had an interesting couple days here. We had the gentleman from Kroger that runs their robotics division booked, and he had some health issues, so he canceled 2 days ago. So I called Chris Welch thinking, well, his season's over and he's got nothing to do, and he was very happy to agree to jump in here. Yesterday afternoon, he texted me, and they had a death in the family out of town, and they were leaving to make the funeral arrangements and so on. So we went to the next plant. So I always wondered, all the years that I chaired program committee, what would I do if the speaker didn't show up at the last minute? And now I know. So we decided to pull together this sort of an impromptu program. We have a wealth of investment advisors and financial types in our club that are very good. And if you've ever been to our investment committee meeting for Rotary Foundation, we always have a very interesting conversation at the end, asking different questions and getting people's insights about the economy and the effect of each of these items on the stock market and so on. So we'll do something like that today. And we'll also leave time for a good Q&A. So if this doesn't work, it'll be your fault. I was asked to make a public service announcement before we start. If you happen to see an email with the subject of pork, ham, preservatives, and salt, don't open it. It's spam. All right, President Melinda gave you a quick introduction to our folks up here. Susan Snodgrass, you all know, she's the financial advisor with Wells Fargo Advisors. And as President Melinda said, she's also a member of our Foundation Investment Committee. And Eric was introduced to you earlier. He, in addition to his current experience, he spent some time on Wall Street. He worked also 10 years for PNC. And Stephen King is the Vice President of WillQuest and also our President-elect. So we thank you all for agreeing to join us today. Please have a seat. So before I throw out some questions, I thought you might be interested in the foundation investments. We have managed to keep the portfolio right around $7 million, and that's after withdrawing almost $1 million for the purchase of the extra 50 acres next to Camp Allen, and so that obviously put a big hit into the portfolio, but it's come back very nicely, and we're back up near the $7 million level. We've been using, thanks. We've been using the 70-30 model of equities versus fixed income, and we haven't really bought fixed income. We've been using CDs because we just felt like for the risk involved, we didn't get paid enough to go far out in the bond cycle. So that's worked out pretty well. We started this strategy with the various mutual funds back in '07, and even through the very bad market of, I guess it was '09 and '10, when everything crashed around us. I remember the S&P being the devil's number 666 for a low at one point, and now we're up around 4,300 on the S&P, and I'm seeing projections that we may crack 5,000 next year, which is pretty tremendous. So anyway, since we started the strategy, our annualized return has been 5.81, and that's taking relatively little risk because we're about a third in CDs, so we're only 2/3 in equities, So that's worked out very well, and the investment committee has done a great job keeping us on track for that. And Gino Colangelo, who's not here today, is the investment advisor, and he's done a tremendous job for us also. So what we'll do for the program is I'll throw out some topics that are in the headlines and ask the folks to chat about them, and ask for how they see that particular problem or scenario affecting our markets, both the credit and the equity markets. And we'll run down a list of those, and at the end, if we have time, we can chat about Bitcoin and crypto a little bit and see how everybody feels about that these days. And so let's start with inflation. They announced this morning that the August 20 versus 21 numbers have an overall inflation rate of 5.3, which a year ago would have been pretty unheard of. And some of the numbers are actually much higher than that. As you heard, containers in ports are sitting there idle. They can't get enough of them. Some of them have multiplied 10 times what the cost would be to contract a container. And they're not getting unloaded, and when they do, there are not enough trucks, and so we've got a backup in the supply chain. And so a lot of things are causing inflation, and you've probably watched the oil market shooting up, and that's up into the 70s right now. And food costs, for anybody that's going to the supermarket, you see that on a daily basis. So I'd like to get the panel's response on, do they think that this is sort of an interim inflationary period that's going to back off? Or are we going to be off and running with the inflation rate going forward? Steve, you want to start?
Thank you, Al. I think everybody has got their eye on inflation. I think that is the topic of the day. The analysts in my office spend a lot of time looking at two things: inflation and interest rates. And I will be the first to tell you that I cannot predict the future. I have learned a great deal of humility in this industry, and predicting the future of interest rates is going to be one of the pivotal inflection points, I think, of the next 5 years. Clearly, inflation is here. The question to me is how long it lasts, and then what is the Fed going to do about it? And I'm probably not the foremost authority on what the Fed is going to do about that, that's for sure. But I can tell you that we're spending a lot of time looking at it and trying to use that as a gauge of the economic outlook, certainly for the next 12 to 24 months. Eric or Susan, do you have any insights about what the Fed is going to do and react to the presence now of over 5% inflation, at least in the short run?
Thanks, Steve. We also look at inflation and interest rates. When we look at inflation, as Al said, it's year over year is quite staggering. But if you look at the kind of the rate from even a few months ago, the rate of change has been coming down. You have seen lumber prices go up, you've seen commodities come up, but it's actually off its highs. So if you look at what the Federal Reserve is looking at, there's a word they're throwing out, which is transitory, which has been in the headlines of late and even all throughout the summer. The market's wrestling with, is it transitory or is it permanent? We're the belief that as we roll through in 2022 and 2023, inflation will come back to a more normal rate of, say, 2%, and that's really what the bond market is looking at. As Al mentioned, the first 10 years of my career was as an analyst, trader, and portfolio manager running a convertible bond fund in New York. And I have to say that over my career, the bond market is really the smartest folks in the room, and they look out not just what's happening today or 6 months from now. They're looking out 2 to 3 years out in the future. And with the 10-year creeping up to over 1.5%, which, from its lows is certainly higher. It's not in a crazy levels as in the 70s or other time periods, but the bond market is really looking ahead and looking at inflation rolling down. I would say that the two issues that we're watching are wage inflation as well as energy pricing. It doesn't, if you drive anywhere in Cincinnati or anywhere in the country, you'll see prices, for wage jobs going up. Amazon is now offering $23 per hour locally. So workers are getting compensated for their work, which is quite different from a few years ago. So as that goes through the system, that is a concern. You even saw Kellogg's announced today that they're shutting down their cereal plant because the workers feel that they have more control over the situation. But if that creeps through, that will be a concern, as well as energy pricing is a headwind for the consumer. But we're still constructive on the economy going forward. And speaking to the Federal Reserve, Jake Powell's up for reappointment. And the market's wrestling with that as well, whether it's going to continue to be Jake or someone else like Leo Brainerd, who's a little less dovish on the accommodation. So the market's going to be wrestling with that, but the focus, what we look at is looking at high quality companies that pay dividends and grow those dividends, because that's a great hedge against inflation. If inflation's up 5% and I can grow the income of your portfolio at 8%, that's a natural hedge against inflation. So we stick to our true guidance, which is focusing on high quality companies in this environment, and we are positive still in both the economy and the financial markets. I'll turn it over to Susan as well.
Well, thank you. I couldn't agree more with what Eric had to say. The Federal Reserve has two mandates. Inflation, and their target, like he said, is 2%, and then also employment. So we do think that inflation, this period that we have in here, is transitory, but it may take some time. It may take the next 12 months for all these supply chain issues to work themselves out. We just recently, our equity strategist, Scott Wren, just recently published a report stating that inventories might be light this holiday season. So when you go to the shelves at the store, you might not find as much inventory as you have in the past. We are, to Eric's point, we are constructive on the markets. We too like large cap U.S. companies that have low debt on their balance sheets, a lot of free cash flow, can weather this time in the market where you've got the debt ceiling and also these issues with supply chain and inflation. Those companies are going to withstand the test of time and also pay a dividend, and in a lot of cases grow their dividends. So, and we also like U.S. small cap companies as well that have that same type of structure.
Okay, thank you. Good answers. Always tough to be the last person on the panel. I feel like Elizabeth Taylor's fifth husband. You know what you're supposed to do, but you're not sure how to make it interesting. So, but you did a good job. So we'll start with you next time. The earnings reports will be rolling out next week, or starting to, and one of the questions will be, as we see the inflation out there, are the corporations going to absorb the price hikes that they're receiving, or are they going to pass them along to their consumer? Why don't you start, Susan?
Yeah, I think we've seen that already. We've heard a lot of companies, a lot of CEOs, because of those their margins are tight already, and because of supply chain issues and things, they are passing that on to onto the consumer. Their cost analysis, they are still trying to make a profit and trying to appease their shareholders. So I think we do think they are in the process of passing that on to the consumer, and you're seeing it, right? Where everything's feels when you go to the grocery store, cars, all those prices of consumer goods are higher.
Okay. All right, let's keep moving down our list of topics here. I'm interested in your comments on federal debt. Normally, if a country approaches their debt level at about 100% of GDP, that's kind of a warning sign. We are at 125% of GDP and looking to grow it a lot higher. Eric, what's your take on that?
Thanks, Al, and certainly that's a question that the market's wrestling with, but this has been a challenge for not only this year, but over the last series of years. The debt as a total, percentage-wise, has been increasing, but the reality is many of the studies that, there's a famous Rogoff study that looked at really Japan and the debt level there, and that study was extrapolated to say, well, U.S. will fall into the Japanese kind of paradigm, but the reality is we're actually growing. Our demographics are still strong as opposed to Europe and Japan where it's shrinking. So we have a good backdrop. The reality is the Federal Reserve needs the economy to stay at an elevated level. They don't really want interest rates to be at a higher level to kind of cut off the growth in the U.S. economy. And even though it's at a high level, there is enough accommodation and expansion and fiscal stimulus to grow the U.S. economy. And we've seen record stimulus. The stimulus of the last several years was greater, as you've seen, than even the stimulus over World War II. But the reality is our economy's absorbed that, and the debt, the issuance has, the bond market is able to absorb that as well. So it's something we're watching, but it's not as alarming as some of the pundits would have you kind of think. So we still think that the Federal Reserve has a good focus on the growth going forward, and we would expect growth to come down 2022 and 23, but back to more normal levels. But that's still a good thing compared to the global economy, which is not growing as well as the U.S. right now. The U.S., we kind of call, what I call it is it's right now the best house on the street, and so that's why we're focused in as opposed to a bad block. So I'll pass it over to Steve if he wants to comment as well.
In my economics classes, the theory was that interest rates would prove to be a governor on the ability of a government to continue to borrow just forever. And we have witnessed sort of a breaking of that paradigm, at least here in the last 10 years, where we have hit that 100% threshold and gone well past it, and projecting to continue to push that. And the question in my mind has always been, well, where's the check and the balance, right? When are interest rates going to rise? When are investors going to demand a premium for loaning to the U.S. government? And to Eric's point, I don't think it's going to be anytime soon. I think as long as the U.S. dollar remains the world currency, world reserve currency, as long as our economy is continuing to lead the developed world, I think there's going to be a long line of people willing to loan money to us. And it doesn't necessarily bode well to the fiscal spending churn that I'm observing in Congress. It seems like no matter which party's in charge, spending is on the agenda. And I don't know how long that will last, but as long as these interest rates remain low, we can finance this for a very long time.
One of the traditional ways of government paying back their debt is inflation. And if they jack up the inflation high enough, they're paying back the debt in cheaper dollars. Anybody want to comment on that?
I think that's the Federal Reserve's plan. I think that's insightful, Al, and if they're able to thread the needle and keep productivity growing faster than their debt service, then they can do all those things. It's quite a task that the Fed has laid out before itself. They are certainly in the best position to watch this. They have the best data, but they are a human institution, so I worry about their institutional biases and their blind spots.
And if I could add comments around, we have a very U.S.-centric view on interest rates, but if you look across the world, we, on a relative basis, we are still providing a considerable yield to our partners that are outside our borders, and we are the best credited in the world. So for that reason, rates have been abnormally low based on inflation growth, and so we're definitely in uncharted waters. One of the things actually we're looking into, and I think Al commented on as well, not only is the global supply chain, but also the it's almost the vacancy in the companies. The companies I'm talking with are in some cases 30% below where they need to be as far as workers, and they're struggling trying to find good quality workers out in the U.S., whether it's in Cincinnati or anywhere else in this economy. So that, we're looking at that as potential kind of headwinds going forward for growth. And we're still looking into the causes of that. A lot of it was, we believe that we will not get back to the unemployment rate that we had pre-COVID. There's structural changes that occurred, and a lot of families have decided to change their their household structure. So going from 2 households in the workforce down to 1 is causing less supply of workers in the community. So there are certainly issues that we're looking at that are beyond inflation, interest rates, but it's something that will be brooding, and also the supply chain is something we're looking at that Al commented about. What we're definitely looking at on a regular basis to see if that's something we need to take action on.
All right, thank you. We're moving toward the end of our segment before we go to Q&A, but I want to touch on the Bitcoin part, and I'll start with you on that. The Bitcoin, when I was first looking at it, was around $100, and now it's like 51,000. Okay, it's at a dramatic run. The secrecy of it is apparently very appealing. The questions that I have are how real is that? Because I'm wondering do we think the government's really going to let this huge pot of money sit out there untaxed? And I have my doubts about that. China has already pulled in the outlawed Bitcoin basically, and have started their own cryptocurrency. The U.S. is talking about starting their own cryptocurrency, and they're the most stable of the group. I don't know how many have heard of Dogecoin, but that was started as a spoof on Bitcoin, sort of a satire, and it took off, and it's been selling like crazy, and people are trading it back and forth and making money on it. It has no quantity restraints, so you can make unlimited amounts of it, and the price keeps going up. I don't know how many heard recently of the newest one called Flockonomics, and that just came out recently, and that's another kind of a fake Bitcoin. It's named after Elon Musk's dog, and the thought process of the people that created this was, if they can get Musk to tweet about this, it's going to drive the price crazy, which has happened in the past. So anyway, that's a lot to unload, but Susan, tell me what you think.
So Bitcoin, his Warren Buffett, when he was asked the same question, what he thought about Bitcoin, he said, I don't understand it, and I don't invest in something I don't understand. In a large part, we have that same philosophy. It is a complicated type of an investment, unregulated, to Al's point, and we can't buy it for our clients. At this time, we don't have an opinion on Bitcoin.
So one thing to think about is there's the Bitcoin, Dogecoin, all of the cryptocurrencies, which there's more than 100, are sitting on top of what they call the blockchain. And the blockchain is real. It's a decentralized finance structure. And just give you a quick story. In El Salvador, Bitcoin is now an additional currency that can be used for transactions. There is no credit card availability. MasterCard or Visa is not available in El Salvador. The government set up a structure so that small businesses can interact through electronic payments using a blockchain transaction process on their phones. And the growth in that country just from that recent change has been astronomical. Companies are moving to El Salvador and using the blockchain to build new types of companies. Bitcoin is one of the kind of layers on top of the blockchain. I just use that as an example because it is real, and blockchain is the foundation of which all cryptocurrencies is created. We actually, we do have an exposure through what I've created as an equity plus structure, which is a thematic delivery. It's using an ETF or a fund structure through Bitcoin. And what we do is we put in thematic ideas like electric vehicles, infrastructure, innovation, and Bitcoin as one of those structures. And it's only used for those clients who want to take a little bit of higher risk in their equity exposure. But the Bitcoin itself, there's a difference between the Bitcoin and the blockchain, and we can certainly speak more after this call because it could take hours discussing that, and we want to stay on our timeline. And also, just as a plug, Journey Advisory Group is hosting the Rotarians at Work on the 28th, and we can certainly have more discussions if you sign up to meet with us in our office in Covington. But we do have it as an exposure. We've had that for several years in Bitcoin. And we look at it as an asset, not as a currency. And we still feel that there's opportunity there. There's a limited amount of Bitcoin generated, and in a few years the supply will be completed.
Okay, thank you. We'll go to Q&A. I think Melinda's getting ready to give us the hook up there. Deanne has a microphone. So please raise your hand. Deanne will bring it over to you, and you can ask questions of the panel generally or individually or however you choose.
Hi, Terry Dean. It seems that our labor shortage in so many areas It seems that the labor shortage in so many areas is a result of low-skilled and unskilled workers. And if you could take the politics out of it, is there an economic solution south of the border for all those people that are literally dying to come to this country to work? Can we fill the positions with that resource? Thank you.
Steve, you want to start?
Terry, thanks for the question. I remember when Alejandro Cornejo came here for the first time to speak on behalf of the Hispanic Chamber of Commerce, and he presented that very thesis, Terry. He said, how fortunate the United States is. That we have a Judeo-Christian source of labor in North America dying literally to get into this country and to live the American dream. And that what has happened to Japan, who's notoriously closed its borders to immigration, and their demographics are so heavily skewed towards older Japanese that there are so few younger Japanese to support the benefits that are promised to the older generations, that we can avoid that outcome, as Eric was mentioning earlier. I would like to think that somewhere at the Federal Reserve and somewhere in the Treasury Department, there's someone who realizes that very fact, Terry, that labor is a extremely important input to the American economy, and that there's room for that labor to find a home here, politics aside.
Question? Hux, did you have a question?
When I was a young man, I was informed that the only thing I needed to know about investment was dollar cost average into a no-load mutual fund. Would that be good advice to young people now?
Thanks, Hux. I think we would all agree that one of the biggest advantage for investing is time. So studies have shown that if you invest, say, when you're 18 versus when you're 30 or 40, even if the return is astronomical for the 30 or 40-year-old, being prudent and saving money either in your 401k or 403b or even a taxable account is one of the best gifts that you can make for your own family as well as for the next generation. So the discipline is key, number one, and starting early is also paramount. Investing in a broad basket and diversified approach also makes a lot of sense, and that's proven over times. The biggest challenge that investors have is the emotional factor of selling at the wrong time. If you're not committed to the long term, say from 18 to age 90 or 95, and every time the market goes down, like in March of 2020 or any of the financial crisis, if you never got it back in, the returns are far less than if you had stayed committed to the structure. So the key is early, dollar cost average, agreed, as well as stay committed to that structure. Asset allocate. That's why I lost my power there. But the key is to stay committed to that structure and stay disciplined. Too many times we've seen people try to hit the retirement age or retirement number too late in their career, and they have to take on a higher risk to meet their goals. So start early, continue to be prudent and invest for the long term and keep the money working for you.
And I'll just add to that, the investment committee basically uses that philosophy through their 70-30 ratio, because when the market gets higher than the 70%, we sell those off, and then we reinvest it when it dips below the 70. So basically, that's what we're doing, and it's forcing us to sell high and buy low. Any other questions?
I have one, and I have the microphone, so.
Yeah. That does give you the power.
I always wonder when we keep hearing, like right now, this spending bill that our congressional people are looking at, or any time. Like, we keep spending this money, like, how is the money made, or where does it come from? And do we have any concerns about that at some point this will all just collapse?
I think you stumped him.
Nancy, we share your concern. what is money, right? I mean, we're talking about cryptocurrency. We're talking about the Fed helping to actually increase the money supply. You know, it's pretty tough to keep it all straight, and especially when you're talking about trillion-dollar spending packages and $3.5 trillion spending packages and adding money on top of already a pretty significant debt load. The question at the heart of that is it going to collapse? And are we at risk? Is there a risk that we can't observe because we're blinded by the safety of our current financial system? And just like the last financial crisis, financial crises are very difficult to predict. You are vulnerable to your own biases. But my general rule and my general impression, Nancy, is that we are not at the precipice, and the economics are still healthy enough, both demographically and intrinsically, that this flywheel is moving, and the U.S. economy is enormous, and it's not on the precipice of collapse.
Okay, on that note, thank you, panel. Great job.
Thank you very much.
Turn it back over to President Melinda.
Thank you very much, Al. That was a very good moderation of the panel. Let's give them another round of applause. Outstanding. We have great Rotarians in Club 17. You never know what you may miss if you don't come to a meeting. That was great information. And it may not quite be what's on the agenda from the beginning, but it's just what we needed. So thank you very much. Very good information, and seems like it was what we had on the agenda to start, Plan A. We have several meetings this afternoon. The Rotary Cincinnati Due Days Committee will meet in Boardroom 4 on the mezzanine level. The Young Professionals Committee will meet on the mezzanine level as well in Boardroom 3. The Classification Committee will meet in the Julep Room here on the 3rd floor. And the New Members Advisory Committee will meet right here in the Hall of Mirrors. Remember, next week we will have our ArcEd Large Club Conference. We will have our guests. They will be joining us for lunch. So please remember to send your RSVP in to the office by 11 o'clock on Monday so the hotel can prepare adequately for the meal and for workers and staff. And that's it. Thank you so much for coming. Make it a great week. Meeting adjourned.